Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of Tesla. Now, in the last update, we were looking at the weekly chart and we were looking right at here at this support test of 223 and 218. It did reach our downside targets, this whole sell-off of this correction, because Tesla became quite extended from the top in the cloud, and that was the profit-taking zone. There was also a couple of sell signals on the 4-hour Ichimoku cloud. It got you out here right at the top. And now we're waiting for the rebound. We got our rebounded. We got in a swing trade in here at this cloud chart test here at the top in the cloud. We can see these significant cloud chart support zone here. That gave us courage to swing trade the stock from that zone. You literally had 2 weeks to get in at that zone, and now we've gapped up. A little bit worried about that gap. That gap can still close, and now we're heading for the next upside resistance target. So 287 here is this resistance target, as well as the top end of the cloud here. Let's take a look at that one here. That one there. There we go. Now we testing that to see if we can get a sustained rally past that 276, and the next resistance target after that, if the rally momentum lasts, would be the front end of the bottom in the cloud, 313, and by that time we should also see the turning line hit that zone, and then after that the upside target would be the 350 zone. But so far so good. Got our rebound off the weekly. It was really a fantastic swing trade up to that zone, and we were quite comfortable in taking that swing trade from these top end cloud chart support levels. Right, next up is the daily Ichimoku. We can see got our rebound here. 223, 218 was the downside targets of this sell-off when the stock sliced through the bottom in the cloud here. We had all these downside support targets to be tested. Eventually the ultimate bottom was this support zone here, and this 223 and 218 target. Got to that target, then we had to get out of our short and swing trade to the upside. Got our rebound there. Another little test of the rebound there, crossed the turning line of the Ichimoku cloud, so that's good news. Gapped up to now this 276 resistance zone that we get off the weekly, but the other level to watch out for, as well as the bottom end of the front in the cloud there. So watch out for 263 to come in as a new support zone. If we get a snapback here, just consolidate this move. And then the upside resistance target, the first one here, would be the standard line of the cloud here, 292. So this 287, the bottom end of the cloud chart shadow, where we look back to look at the support zones in the past, that is a resistance zone together with 292, the standard line of the Ichimoku cloud. That's now the next upside target. So far so good. We've got our rebound rally, and we've got these upside targets for Tesla. Now, if we get here, the critical thing will then be to see if we're going to break past the 292, and if we get past that 292, the next upside targets would be this old cloud chart support zone. That's now a resistance zone, as well as this front end cloud chart support resistance zone. Let me just get that line in there correctly. This front end, the top end of the front end of the cloud. So these are the upside resistance targets: 292, well, 287, 292, 313, and then 328 to the upside if this upside momentum lasts. Now that would be interesting because we've got a Fibonacci. Let's take a look at where the Fibonacci retracement zone is. So if we take that high there, we go right down to this bottom here. We can see where's the Fibonacci retracement at that zone. And also for 23, that would be a 50%, is right up there, so that's a bit high. But this one here would be, just move that thing there, 38% retracement. Yeah, so that would be interesting. So let's get back to a 38% retracement of this big drop to the upside. So that's quite plausible that we can see that 292 target and this 313 zone being hit in the current rally. But we can still see a consolidation, a snapback to catch up with the turning line of the Ichimoku cloud and leveling out there, so we can possibly swing trade any kind of snapback to back down to 263 can be seen as another swing trade entry point, but we're close to the upside resistance targets on the daily Ichimoku. Now, the swing trade position we took there was based on, one, it was a significant cloud chart support zone, but the other thing as well that we were looking at Tesla's valuation. We can see here the price momentum score was starting to show very, very good price momentum to the upside, so we took a trade on the back of that. Looking at the Starmine model, we still know that Tesla is significantly overvalued, fundamentally a poor quality business, and it's terribly overvalued on compared to its peer groups there on various measures there. And the long-term growth rate that the current stock price is implying is about 29 to 30%. So you can see the current stock price imply over the next couple of years a 30% growth rate. So there's quite a lot of work for Tesla to do in terms of bolstering the earnings growth, etc. But the swing trade was purely done on a cloud chart swing trade rebound, technical rebound, and we looked at the StarMine price momentum score at the time was a little bit below, well, I think it was 79 or so. So that gave us a bit more comfort, that it gave us early indication that we might get a rebound rally based on the price momentum score, the StarMine price momentum score. And we can see the price momentum score is 82 there, so still looking good. But as for a fundamental valuation, terribly overvalued there. Earnings quality is very poor. It's got a StarMine ranking of 34. So there's, in terms of earnings quality, I wouldn't trust the accounting at Tesla, so to speak. So it's got a lot of work to do on that basis. So it was evaluated. It was not really a valuation trade because the stock's still overvalued regardless of the 54% drop that it's had. And you can also see compared to the relative global rank globally even, the stock doesn't really look very attractive on that basis. We were trading purely on a technical rebound as well as a price momentum rebound from an Ichimoku cloud chart perspective. Let's go and take a look at the hourly one. That should be interest 4-hour and hourly one intraday a little bit, because we now got that nice little rebound rally. The secondary, you can see that nice support rebound there. Interesting candle there, spinning candle, kind of indecisive between the buyers and sellers, and that gave us extra comfort for that trade. Then you got the turning line cross there and support in the turning line there. Another little test there of the support, another swing trade entry point, another entry point at the turning line support zone there. Then we crossed the standard line, huge cap up there. Now we're getting close to the bottom in cloud chart resistance zone, so you can keep an eye on these levels here. That 292 resistance zone there, as well as that zone there just under the 300. Let's put a line in there. There's so many lines on here one of these days. There we go. Let's put a line in there. So keep an eye on that's your profit target zone for the current rally between 292 and 287. And what we really want to see is we want to see a breakout past this cloud chart resistance, and then only will Tesla be bullish on the 4-hour Ichimoku. So this was a swing trade, rebound rally swing trade in an overall bearish Ichimoku cloud, and we now need to see a breakout past this cloud chart resistance zone to be really bullish on the 4-hour Ichimoku. So watch out for the price interaction in and around this 292 and 298 and just under 300 zone in the coming week. As for the hourly, for the very short-term traders there, we had plenty of swing trade buy signals there. Good news is we're back above the top end of the cloud here, so we are in bullish zone. You can see we had a nice cloud cross there to buy. We also had a weak cloud chart buy signal below the cloud here, and off we went. And now we're getting close to this cluster of resistance here. You can see there where that resistance is coming from, and you can see these upside resistance targets based on the 4-hour Ichimoku. But so far so good for Tesla. Just a few things on the hourly. Watch out for the turning line and the standard line of the cloud here to become new support zones in case we get a bit of a pullback to support, as well as the bottom end of the cloud here is a major support zone on the hourly. Just go back to the 4-hour. Keep an eye on there. You can see there we've got a buy signal, a weak buy signal below the cloud where the turning line crosses the standard line, so that's good news. And then the turning line and the standard line should now act as a new support zone here for Tesla around about the 250 zone. That coincides well with the bottom end of the front end of the cloud, so keep an eye on those levels. But the big story is really this big picture rebound from the top end of the cloud support zone on the weekly. So far so good. Until next time, happy cloud chart trading. Bye for now.